Take a look, traders. Here on gold I spotted a key level. First, it was a very strong resistance, and 3 times in a row the market dropped from that. And then after the breakout, the structure turned into support. And from that I managed to predict the strong bullish movement. In this video I will teach you how to identify support and resistance. We will discuss the criteria for the identification of the structures. Then we'll discuss the examples and I will share with you very important tips. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. And let's start with the basics first. Let me give you the definition of a key structure. Key structure is the zone or the level from where a strong bullish or bearish movement initiated in the past. And from that structure, we expect a similar kind of reaction in future once it is reached. And here on pound dollar, I have analyzed the key levels for you. And the main element of all the structures is that they all based on the historical price action. For example, let's take that structure right here. The fact is that first it was a very strong resistance and the market dropped from that. Then after the breakout it turned into support, and from that structure the market bounced sharply. Then again that structure was violated and it turned into resistance and the market dropped from that, perfectly respecting that structure. And all these structures were respected in the past, and you can see how strong bullish or bearish movements initiated from that. Now let's discuss the criteria of key structures. Hey traders, for more education, join my premium educational group. There you will get the access to my daily live streams. There you will get a copy of my ebook. There you will get the video course about my trading strategy. For more info, check my website. It is vasilytrader.com/private group. The link in the description below. Check that and let's continue. And there are two sets of criteria for key structures: the mandatory criteria and the optional criteria. Let's start with the mandatory ones first. Analyzing the historical price action, you should pick only the obvious key levels. Yes, the levels that can easily be identified and from where you can easily notice a strong bullish or bearish reaction. Yes, you can see that here analyzing the price action on a dollar-yen pair, we quite easily spotted these 4 structures. The fact is that from these structures, a strong movement initiated, and it is the second mandatory criteria. From a key structure, a solid bullish or bearish movement initiated. Then we go through the optional criteria. The first optional criteria is that the key structure should be respected many times in a row. For example, that structure right here was respected 4 times. First, it was a very strong support, and after the breakout, it turned into resistance. And as a resistance, it was respected 2 times, and 2 times as the support. And that structure as well. It was respected many times as the support, and then after the breakout, it was respected many times as the resistance. And for example, that structure right here was respected just 1 time. So more structure was respected in the past, stronger is that structure. One more optional criteria that we should mention is that it is highly preferable that the structure that you spotted is recent. What do we mean by recent? Is that we can see how the market reacted to that structure in the recent past, so that reaction can be spotted on the chart without scrolling. So all the structures right here that we spotted, they all are recent. And let's compare these structures to this structure right here. So that structure was very important for the market in the past, and we see a very strong bullish movement from that. However, that structure was respected the last time more than half a year ago. And of course, it is not that recent as the structures that we spotted earlier. So remember that more fresh is the structure, stronger and more important it is. And now you're probably wondering how exactly to draw the key structures. So let's take our structures that we spotted on the dollar yen and let me show you my rules for drawing the key structures. So the point is that we have a key support and key resistance. In order to draw a key support, you spot the lowest wick, yes, the lowest point within that structure. And it is the lower boundary of that structure. The upper boundary of the support is the lowest candle close, right? So here is your key support. If we talk about a key resistance, we take first the highest wick, right? The highest wick. And it will be the upper boundary of the structure. The lower boundary of the structure will be the highest candle close. Here it goes. So our exact structure will be like that. Yes, we took the highest wick and the lowest candle close. Then let's take that structure right here. First of all, let's take the highest wick. Here it goes. It is the upper boundary of that resistance, and the lower boundary of that resistance will be the highest candle close, right? So here is our key resistance. And then traders, here goes our last structure. So again, let's take our highest wick and the highest candle close. So here goes our exact resistance. Yes, here is our resistance area. So let's briefly repeat the criteria that we discussed for a key structure, and then let's execute the structure analysis on a WTI crude oil. The first mandatory criteria is that the structure is obvious. Yes, and we should easily recognize that. And the second mandatory criteria is that a strong bullish or bearish reaction initiated from this structure. Also, we have two optional criteria. This structure should be recent, yes, and we discussed that older structure is not that important as the newer structure. And we also discussed that more times the structure respected in the past, stronger is that structure. Now let's analyze the key levels here on the WTI crude oil. So first of all, let's start with the supports. You can see, traders, that from here a strong bullish movement initiated. And definitely right here we have a support. So its lower boundary will be based on the lowest wick, and its upper boundary will be based on the lowest candle close. So here is our key support on WTI crude oil. Now let's look for resistances. It turned out, traders, that right here we got a strong support. First it was a strong resistance, then it was broken to the upside, was respected many times. Yes, it was a very strong support right here, and then it was broken again. So it looks like right here we have a key resistance. So let's draw its boundaries together. Its lower boundary will be based on the lowest wick, and its upper boundary will be based on the lowest candle close. So here is our resistance right here on WTI crude oil. And again, traders, we draw it this way because it was a support recently, and then it was broken to the downside with that high momentum bearish candle. Yes, I hope it is clear. Now we have one more very important resistance right here that was respected 2 times in a row. Take a look. Here is its highest candle close, right? And here is its highest wick. So here is our resistance, right? And we also have the structure right here. And it is a very interesting situation how to deal with this structure right here. Technically speaking, if we extend the area of the structure, you can see that it covers the highest candle close right here. So I would suggest extending our resistance right here, taking into consideration, yes, that wick as well. So here we have a very wide and strong structure resistance. I hope that you enjoyed this video, traders, and if you have any questions, always feel free to ask me in the comment section. I always reply. Also, traders, let me know in the comment section if you want to see more videos about structure analysis in the future. Also, traders, if you want to learn how to trade, if you want to see how I trade live, don't forget to check my premium educational group, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you next week, traders. Thank you so much for watching.